Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. The markets are a fine kettle of fish, as there are numerous conundrums and predicaments that just won't go away. My first blip looks at the Bond Conundrum, which has gone on for years now. The yield on the 30-year bond has been in a trading range between 5.5% and 4.1%, whether the federal funds rate is 1% or 5.25%. Annual support is 4.975 with quarterly and weekly supports at 4.489 and 4.560 and quarterly resistance at 4.191. The 30-year yield ended the week below its 200-week simple moving average at 4.722. Fannie Mae spreads have narrowed but remain wide at 82.6 basis points in the 5-year and 62.8 basis points in the 10-year. The perception is that the U.S. Treasury will backstop frick and frack at the expense of shareholders. On Fox Business Countdown to the Closing Bell last Wednesday, I was asked if Fannie Mae and Freddie Mac would be bailed out last week. I said no. The housing bill does not become law until October 1st. My second blip looks at the topping out patterns for gold, crude oil, and the euro. For gold, my semi-annual pivot is 796.5 with weekly resistance at 848.5 and the 200-day simple moving average at 891.3. My annual support lags at 729.5. Note that the weekly chart shows a 200-week simple moving average at 634.2 and that a down channel is forming. For crude oil, a 200-day simple moving average is 110.69 with weekly support at 109.15 and weekly resistance at 120.95. Even though my fearless prediction of the week last week was wrong, I called for a break of the 200-day, if you remember. You did have an opportunity to sell strength to last week's resistance at 120.73. Note that the 200-week simple moving average is 72.88 and that it's rising to match the prediction I made on Fox Business Countdown to the Closing Bell also last Wednesday. The prediction is $75 oil by the end of the first quarter 2009. I made a similar prediction in 2006, calling for 50 before 100, and 50 was tested at the low in January 2007. For the euro, annual support is 1.4174 with weekly and semi-annual resistances at 1.4869 and 1.5161 and the 200-day simple moving average at 1.5234. The weekly chart shows a double top just above 160, but the euro is well above its 200-week at 1.3336. My third blip looks at the kettle of fish in the equity markets. The S&P 500 is above my annual pivot at 1276.6, but a close in August below 1358.7 is a long-term negative. For the NASDAQ, it's below my annual pivot at 2536, but a close in August above 2415 is a long-term neutral. For utilities, it's above my annual pivot at 483.26, but a close in August below 503.48 is a long-term negative. For the transports, it's above my annual pivot at 42.67, but a close in August above 49.60 is a long-term positive. For the Russell 2000, it's between annual pivots at 730.04 and 754.76, and a close in August above 727.53 is a long-term positive. The SOX is below its semi-annual pivots at 378.50 and 381.45, and a close in August below 385.47 is a long-term negative. Wow, is that a kettle of fish? My fourth blip looks at the Dow charts, which are my main focus. For the Dow, monthly and annual supports are 11,075 and 10,747, with a weekly pivot at 11,604. The 200-week simple moving average is 11,732, and the 200-day is at 12,405. The monthly chart stays negative on a close in August below 12,291, but will not close below its 120-month simple moving average at 10,600. It's 10,600. So a multi-year bear market is not yet signaled. As I said at the open, the U.S. capital markets are a fine kettle of fish. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 and 4. Enjoy your day.